So welcome to Frugal Finance. Today we're going to have a look at buying a property through a company, or more specifically, if you have it in your personal name, transferring it into that company. So the purpose of doing this is to avoid Section 24 legislation and get the other benefits of having a company own the asset rather than in your personal name. So with that said, please do smash the like button, don't forget to subscribe, and let's get stuck in. So what we've got is you own a property in your own name, and you will have to pay tax on the finance relief element of your expenditure, which is essentially your mortgage. So if you earn £1,000 from the rent and the mortgage is £500, you will pay tax on the £1,000, not on the £500 profit. So obviously your tax bill is slightly bigger. Now obviously that's made a lot of properties in the UK unviable for some people. I've done lots of videos on it, so I'm not going to kind of dwell on the subject too much. I will assume that you have an understanding of Section 24 legislation, as in why we might want to do this. And then I'll also have an understanding, assumption that you have set up a limited company. If you haven't set up a limited company, you can take advice from your accountant or look at various advice on the internet. You can set up companies for as little as £13–14, but I do suggest that you do your research on them, because there are many different ways you can set up companies, and obviously structure for you in the future. If you've got kids you want to hand shares down to and things like that, now's the perfect time to think about those things, not later. Why would you want to do it? So clearly we want to do it to avoid Section 24, and then obviously there are some benefits to tax via a company and various other tax deductible allowances and things. But what you need to do is essentially take your portfolio and transfer it into a company name. So I've personally done this with one property. So I've got 3 in my own name and a bunch in a company name. And I thought, as we've got the stamp duty holiday this year that's now been extended, I would transfer a property that's in my name into a limited company name. Now there were a few things that I knew about. Obviously the interest is slightly higher on a company mortgage as opposed to a residential one, so obviously you do have to do your maths on it and work out that this is going to be suitable for you. Accountancy fees tend to be higher. They're not such a big factor for me because we do keep good record keeping my business, but if you're a personal person and you need to employ an accountant to do this for you, you need to take that into consideration. And obviously filing things like your confirmation statement, so who the shareholders are, and then any legal advice. And then on top of all of that, you need to pay solicitors extra money on top of the normal money for some reason or other. But essentially that is to do with the company element of your transaction. So there's 2 elements to it, which I know I say it's a shame that you have to pay it, but they do have to earn money and they do have a living. It's just a shame because it costs money. Essentially the first element is you have to take your own independent legal advice if you are loaning money to the company. So let's say you've got a portfolio of £2 million and you want to go and transfer that into a limited company. Essentially you might not, your limited company might not have £2 million to buy that off of you, so you're going to end up loaning it the £2 million. So you have to have an agreement in place, you have to have board minutes, meetings, even if it's only you as a sole director, basically confirming that the company agrees that you're going to loan it the money and you agree you're going to loan it the money. And you have to take independent legal advice to say that you understand that you may not get your money back and the mortgage company are entitled to come after you as an individual if you're guaranteeing it. So essentially there's a kind of 2 sides. So you've got the minutes to say that you're loaning the company the money, and then you've also got the guarantor element. So those 2 things are 2 separate legal fees. Some solicitors will roll them into one, but generally speaking they're 2 different departments, because obviously you may not be loaning money. So that's your first factors to take into consideration. You really do need to do your research as to what is going to be beneficial to you. Secondly, you need to figure out how you're going to actually fund this deal. So There is actually a normal thing to do, which is you're not going to have £2 million to loan the company and the rest of it. The money is locked away in the assets. So when you actually do the individual transfer into your name, what needs to happen is simultaneously exchange and complete, so that you've got the company here that's just about to buy the property, that needs to put a deposit down, and then you've got the fact that you're just about to sell it and obviously realise the equity in it, but you need to loan that equity to the company so that it can then purchase the property. So we've got a big circle of events here. Solicitors are quite used to doing that, and they should be able to actually put it all together for you, and you shouldn't have to loan the money. However, what I did learn is that there are certain mortgage providers, none named, open brackets, Paragon, close brackets, who insist that the company has the money to start with. So you will need to forward fund that transaction if you are using one of those companies. So my advice, which I didn't realise at the start, and neither did my solicitor, so this was actually a mortgage company dumping this on us at the 11th hour, so to speak, is that you need to make sure, if you're not in a position to loan the company the money for 5-6 days, that you check that clause out. You make sure that they can do that full circle simultaneously and they're happy with that. If they're not, you're going to have to find that money or use another provider. So that was a bit of a steep learning curve for me. Luckily, I did have the money saved up somewhere to temporarily loan it, and don't forget, I was only doing one property. If you were doing several, you will probably not be in the same position. So let's have a quick look at the calculation, which made me conclude that this was the best thing to do for me.
So here we are. I've done a quick little calculation, and I appreciate there are many different factors to here, but if you have the first column here, sorry for the sniffles, I've got a bit of a cold. That's what happens when you've got kids to bring it home, unfortunately. So with the rent, obviously you've got 1,000. So the first column is in your own name, and the second column is in a company name. So the rent is going to be the same, £1,000, that's what the tenant pays. Mortgage wise, obviously £200 versus 379, so almost double what the personal mortgage is. Unfortunately, of late, but commercial mortgages seem to have gone up slightly, and residential mortgages, so ones in your personal name, have actually gone down. So this calculation a year ago would have been much more beneficial, but I'd still demonstrate even now, hopefully at the bottom here, that this is still actually a good viable thing to do. And obviously I'll touch on it, there are some other benefits, but as you'll see, it's £180, so not far off double what it is. Running costs are going to be the same, management's going to be the same. Now, your running costs will vary depending on whether or not you have access to a chartered accountant to do your company accounts, but I assume that what you pay for company accounts will probably be not dissimilar to what you pay for a tax return, especially if you've got a mixture of payway income, 40% tax bracket, you've got child tax credits or child benefit or whatever it's called, all those elements that you take into account. So you've got here your profit here at the end. So obviously the net physical amount of cash that I might have in my pocket is higher with the own name ownership by pretty much the £180 difference on the mortgage. That's pretty much it. But you'll see the taxable income is actually £800 because it's only the running costs and the management that are deductible. Out of that, you're not allowed to deduct the the mortgage costs. Whereas when you're in a company name, then obviously you are allowed to do those. So the taxable amount is only £421. You get a finance relief cost at 20%. So you'll obviously get a £60 relief cost there. So obviously the disadvantage I am saying with the tax side, so personal ownership, is that if you're a 40% taxpayer, which I know a lot of people will say, well, you've got to earn over 50 grand to do that, blah, 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 and I'm never going to earn that. But if you're on a work a job that pays 35-40 grand a year, which is not an unreasonable amount to assume somebody is on. You know, we're not talking somebody that's on 25 grand a year here. They probably may not, you know, they'd have to save very hard to buy about 2 or 3 properties. But say you're on 40 grand a year, you're only going to have to own 1 or 2 before you go into the 40% bracket, which means you have to pay 40% tax. So in this calculation, it's £296. Corporation tax is currently 19%. Now, I know that is going to change in the future and have a sliding scale, but it's obviously of the first £50,000. But the first £50,000 of profit, and that doesn't include your personal wages. So actually, you can earn considerably more before that 19% is going to start going on this sliding scale. So you can see at the bottom here, the net profit is about £36 difference. Was that £37 a penny difference in between the two methods. But obviously there are numerous benefits to it. So if you go above the 50% tax threshold, you will possibly not be entitled to all or a sliding scale percentage wise of things like child benefit, which obviously anyone in the UK is entitled to, an allowance if you have kids off of your tax bill, but they stop that if you go above £50,000. So you won't have that issue if you put it in a company name. You will if you have it in a personal name. And then obviously through a company, there are an awful lot of other things you can do. So there are some other tax deductible incentives and write-offs that you can do, government grants and things. And there's also the ability to issue shareholdings in it. So if you want to pass the company down to your children, tax advantage wise, you can issue shares to it. And obviously things like directors' loans and stuff like that. So there's an awful lot of benefits over and above the £37 a month saving that you can get through a company vehicle usage of that as a to hold property, and this is also on the assumption that the mortgage payments, obviously there is a bit of a discrepancy at the moment because commercial mortgages have not caught up with residential prices. A year or so ago, this 379 probably would have been closer to about 300. So I suspect at some point they will revert back to that. The commercial world is always a little bit further behind, but hopefully that gives you a good example. I appreciate it's brief and it's not an exact science because there are many different things to take into consideration for your different circumstances, but hopefully this gives you a rough idea of the sort of benefits as I see them of this.
So as you can see, I concluded that it was probably a good idea to put it into a company name for a number of factors. So that's what I've done. And as I said before, you need to have a look at all the aspects. So if you've just literally been listening to me rabbit on in the background for the last 20 minutes or so, here's just your key factors. So first of all, make a decision. Do you need to actually do this? Is it going to be beneficial to you? You need to do the calculations. Then select your solicitor. Be wary of the legal process. Make sure the mortgage company are happy for you to do that circular transaction in one go and you don't have to forward fund it. And then once you've done that, then you're all set up, ready to go. That is how you transfer from your personal name into a company name. So if you like this video, please do smash the like button. Don't forget to subscribe. It really does help the channel grow. I hope you like this video. It's my personal journey, if you like, to transferring one into a company name, and I thought it was really worth sharing with everybody my kind of tries and tribulations of it all. So hopefully you've enjoyed this, and with that said, I shall see you next time.